Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about Amazon stock split, the upcoming midterm election predictions, and the trending idea of delaying retirement due to inflation. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Amazon stock split was officially voted in, and the dates are announced. What will this do for Amazon stock?
Hey, good morning, everyone. Thank you for that introduction, Allison, and welcome to June, right? Another stock market month down. The down is behind us, not just down overall, but hang in there. May was another tough month in the market. I'll be out with an investor update for the investors of Ankerstar Wealth here later today to kind of let you know where we stand as a business. But, for everybody else out there, this is time just to hold the line. And, is it going to turn around soon? Don't know. Don't have a crystal ball, but I do like the way June's starting out. You can see the futures are in the green here. All right. Now, Allison's questions about the Amazon stock split. We've been buying Amazon hand over fist. For the past 3 months, and it was since they started talking about the Amazon stock split, was officially voted in Monday by the shareholders. It's going to happen Friday and then take place Monday. So June 3rd is when you're going to start seeing it show up again. For every Amazon share you have, you get 19 more. So it's a 20-for-1 split total. And of course, that's going to bring your Amazon stock price from 2,400 down to 120-ish, right? Depending on how the stock ends this week. So you're going to see that happen. And then of course, that Google's coming up soon. As far as, since we've been buying it, Amazon's up 17% so far, in the past, 4 days or so, or basically the past week. So overall, I think it's going to be a great move for Amazon. And I think the stock is going to continue to march higher.
Next, Brian Wesbury is the chief economist at First Trust, and he recently published his midterm election predictions. What do you make of his predictions?
So good question, Allison. Brian Wesbury, the chief economist at First Trust, put this out, and he says basically, and I get these every Monday. I don't often send them out, but I think it's interesting since it's the outlook for November, right? And everybody's starting to think about these things now because they're not that far away. So 5 months out. Basically, all the House seats, 435 of them turn over. He's predicting that there's going to be a Republican takeover in the House up to the tunes of 95% to reach the majority there. And then as far as the Senate itself, 34 Senate races are up for grabs this time. And he has the numbers down here below that the Democrats only have to defend 14 of them. However, he's also calling a Republican switch in the House to the tune of about 85%. So what would that mean if both the House and the Senate went Republican? Well, that would mean that the government is now in gridlock and that the legislation is unlikely to continue to just fly through like it has been. Right. I would say overall, this is my opinion that the administration has not been that effective of passing a tremendous amount of legislation, but certainly with the Republican taking the House and the Senate would slow that down almost to a complete halt for the next 2 years. Now, how does that affect the market? That brings gridlock into the market. Markets like that because that way there's no new legislative curveballs that they can expect. So overall, I think it's very favorable setup for the market. And, markets tend to price things in sooner than later. So I think you could start seeing that as early as this summer. The market's going back higher in anticipation of this Republican winning in the midterm elections.
Last, a recent article said that up to 25% of Americans are delaying retirement due to inflation. Why is this the case?
Yeah, great question, Allison. I think that, one of the biggest assumptions you make for retirement is inflation. And I use Money Guide Elite, which I think, best of breed. There's also eMoneys that's right up there neck and neck with it. But no matter what financial planning software you use, you're going to have an inflation assumption built in there. And certainly Normally it's 2.5%, which is pessimistic, right? Because inflation tends to hang around 2%. But specifically with what's going on right now with inflation up at 8%, we'll see if it stays there. I personally don't think it will. I think it'll start to ease, but certainly if it stays higher than 2.5%, your assumptions going forward are now flawed. So what are people doing? They're just delaying for right now, just because there's too many unknowns out there. And of course, the mainstream media is fairly negative about everything out there. But it does tell you what you can do if you're going to continue to work. That's one thing. But certainly, if you want to combat inflation, and this is why I really like this article and I want to show you, is what can you do right now if you're a little bit concerned about your financial situation, or you're just like, hey, I need to throttle back a little bit now in anticipation of inflation kind of giving away in the future. And number one there is dining out less, right? That's very expensive. It used to be considered a luxury. For some people that are on the go, it's the only way they have to eat, right? Because they're always going out all the time. Grocery shopping, I know that you have to still go grocery shopping, but certainly on what you're buying, you can cut down on maybe some of the premium brands, go with the generic brands, that sort of thing. Driving less if you have that luxury, of course, and then cutting subscriptions or vacations. Those are all personal decisions. I'm not telling you what to do, but I'm saying if you're sweating money out there, especially when things are starting to get more expensive, dial back the spending, right? Most people don't have the ability to, unless you're an entrepreneur, most people don't have the ability to ramp up what they make. In a daily basis, you don't really have a lever to be able to increase it, but you do have a lever to be able to reduce your spending out there, which can really be the right thing to do. Again, if you're worried about your financial situation, but all in all, if you're within 3 years, I think of retirement, it's probably worth looking at what if inflation stabilized around that 4% level. How do the numbers look then? We shall see. But right now, I think everybody, due to the negativity that's out there, is being smart, and up to 25% are delaying retirement if that's the right thing for you. Certainly now would be the time to be more cautious than aggressive.
Thank you everyone for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.